Okay, we can start the question. Now, you remember in my last class with you, one of the things that we discussed is our cost. Costs, profits, ratio, right? And one of the things I told you about cost profit ratio is that it is used for the purpose of restricting our capital, sorry, our expenses. It is used to restrict our expenses to at least 65% of our revenue. Now, this question I want to do now has two parts to it. Adds the hydrocarbon tax and adds the company income tax to it. So, in our last class, we did not do the company income tax, and that is one of the reasons why I said, okay, let's come back to the class and have this discussion. Okay? If you are just joining your class, the class, I need to see your face. Say you just join the class, show your face. That would be all for them. So, let's go ahead. Have you sent the question to the class? Have you sent the question to the class?
So I think we all have the past question because I've sent it once to the class.
2023, right?
All the past question on tax.
Okay.
We all have it.
Question number 2. 2023, question 2.
Sir, please, which diet?
November 2023.
Which diet, sir? November 2023, thank you. Okay.
I'm there, sir.
Okay, you can read for us.
Brands Petroleum Production Company Limited has been operating as an oil prospecting company in Nigeria for 15 years.
Hold on. This company has been operating as oil prospecting license. Have you? Oil prospecting. What is the implication of oil prospecting license in terms of tax implication?
15%.
Thank you. God bless you. 15%. So you must know that before you even start. Right. Continue. Continue now. Okay, I'll read for myself. As an oil prospecting company in Nigeria for 15 years. The company operates in both onshore and shallow water in the Cocoa area of Niger Delta region. Following the provision of Petroleum Industry Act in 2021, the company applied for and was granted petroleum prospecting license on January 1st, 2021. Extra from the company's financial record for the year ended 31st December 2021 reveal the following. We are given the revenue, just like I told you, we always be given the revenue. Okay? We are given the revenue. Now, the revenue that you are given, in that revenue, they give you value of crude oil sold, value of condensate from acetic gas and natural gas. They give you gross revenue. And at the same time, they gave you balancing charge. They move on to the expenses. They give you some expenses. China, don't let us fight. It's December 2023, November diets. So, as I was saying, so we're now given the following additional information was given. Value of crude oil sold. They give us the type, they give us the quantity, and they give us the actual price and the fiscal price. One thing I've always told you to know is that at every point in time, when examiner gives you a question, the examiner is very keen in their revenue, okay? And that is what the tax authority will also look at. You remember I told you in my last class that the tax authority would assess the company with tax on the higher of fiscal price and actual price. Where fiscal price is higher, you take fiscal price. Where actual price is higher, you take actual price. Do you understand? So that is what the examiner always wants you to also know. When you have that kind of situation, you take the higher of the two. Now, I will said this. We move on to the next one. Now, they gave us the value, they gave us the actual price, they gave us the types. We know that some of them are not going to be our revenue. So we move on to the next one. They now also gave us value number 4, drilling costs comprised of the following. They told us tangible drilling costs for the first exploration well. Is that allowed or not allowed?
Is allowed.
Good. Because I told you first exploration well is allowed. The next one.
Yes.
Drilling for the first 2 appraisal well. Is it allowed or not allowed?
Not allowed.
Thank you. Not allowed. It is allowed. First 2 appraisal well is allowed. First 2 appraisal well is allowed. First exploration well.
Oh, sorry. It's allowed. I thought it's 2. Okay, first is allowed.
So for exploration well, it is only the first one that is allowed. But for appraisal well, it is the first 2 that is allowed. Do you understand?
Sir, question, sir.
Go ahead.
Yeah, based on what you just said on the 2 appraisal well, right? What if we are given a question that has to do with 3 appraisal well? Can we do 3/2 or 2/3?
2/3 multiply by
number
that appraisal well value.
Okay, thank you.
Now 1/3 will be capitalized. Now it's long. Don't go. 1/3 will be capitalized. Okay.
Okay.
1/3 will be capitalized, and the one that you are capitalizing, you are calculating 20% of that as capital allowance. Do you understand?
Yes, sir.
Good. So for that year, the one you did not recognize, you will go and calculate 20% of that as capital allowance. Now, having said this, we move on to the next one. So the next one now is that we are given repairs and maintenance. In our repairs and maintenance that we were given, they gave us repairs of plants, machinery, and features. Is that an allowable expenses or not allowable? Allowable. Repairs or alteration of production implements. You implement it with utensils. Allow or not allow?
Allowable.
Anytime you see it here, they are allowed. Okay. We'll move on to the next one. Losses brought forward from last year, you know how to treat that. Capital allowance computed. They already computed it for you. Now I told you. Production allowance after commencement of Petroleum Industry Act was 3.3 million. Exchange rate was 4.28, 4.25 to $1. You are required. Now, this is where the trick comes. The examiner says you are required as a company tax manager, you have to prepare a report to the managing director showing in line showing in line with the provision of Petroleum Industry Act 2021 and Company Income Tax Act 2024 as amended. Okay, so number one, hydrocarbon tax. Number two, company's income tax payable. Hydrocarbon tax, they put 16 marks. Company income tax, they put 6 marks. Now, when you are given this kind of a question, one thing that you must know is that it is very important and expedient that you compute the company income tax and you also compute the hydrocarbon tax. So if I were you, under examination condition, I'll first go with the one that has 14 marks before I bother myself with the one that has 6 marks. Now, another thing that you also need to note is that this examiner has addressed it to you as a tax manager of the company. Okay, you are writing a report. It's not a big report. You just write the name of your company, okay? As a company tax manager, write the name of your company, you write it to the managing director, and you put the subject. The subject is that you have to compute the hydrocarbon tax and the company income tax. That is what you are supposed to do. So that is what the examiner wants you to do. Okay? And you have done that. So having done that, you now write it out for the examiner. For my hydrocarbon tax, this is what I got. For my this is what I got. You know this is what I got. After careful computation of this agreement, this says the hydrocarbon tax the company is liable to pay. We move on to the next one. So the company income tax. This is the value the company is due to pay for company income tax for the year of assessment on that review. And you close it there. You can tell them that if they need any further inquiry, they should get back to you. You will be willing and ready to let them know. You can tell them, you now at the end of it, you now say to yours faithfully, so that the examiner will know that you are writing a formal report. Okay, so that's that. So let's go ahead and start solving the question. So let's go ahead and start solving the question. The first thing I'm going to do is to go straight to my hydrocarbon tax. What is the name of this company? The name of this company is Brass.
Ground is wet. Ground is wet.
Emmanuel, mute your mic. Emmanuel, mute your mic.
Oh, no, I'll just mute it.
Mute your mic, Emmanuel.
Yeah,
mute your mic.
So this is the last time.
Emmanuel, mute your mic.
No, I was doing the research today.
Emmanuel, mute your mic.
Sorry.
Emmanuel, you are the one we are waiting for. You are distracting the class. Mute your mic.
I've muted.
Mute your mic. You are not muted, though. Don't talk again. Okay, Brass Petroleum Producing Company Limited. Okay, so the examiner requested that we compute hydrocarbon tax. Computation of hydrocarbon tax for what year of assessment? For 2021 year of assessments. So you remember, the first thing we start with is our revenue. Now we have three types of revenue from here. From what I'm seeing, we have revenue from focados. Now, how many barrels do we have? Multiply by what is the higher of the two?
Is the
72.
physical price 72?
72 is higher. That is dollar, you remember. Multiply by what is the exchange rate? 425. Make it a million, just like the examiner already did. So what do you have? Quickly, give me my figure, quickly.
189,720.
Next, from condensate. How many barrels do we have? Multiply by what is the rate? This one has 30, the same rate, nothing. So what do you have? Figure. Figure.
Class of favor. 47,175,000,000.
Okay. The last one, gas. How many do we have? Multiply by the higher of the two. 35. Multiply by 2. What do you have? What do you have?
41,650,000,000.
So, what is my gross revenue? Balancing charge.
278,545,000,000. 545.
What's my balancing charge? What's my total revenue?
278,577,000,000.
Now, the next one is to deduct allowable expenses. What are the allowable expenses? You first start with the, what's it called, additional information before you go back to the body of the question. But fortunately here, there is nothing that we are going to disallow in this additional information, just like we have said before, Abi. So we can actually go from the body of the question. So production allowance, production cost rather. How much are production costs? 106,4 70. The next one, cost of reinjection. Well, how much is that? 600, right? Drilling cost. The drilling is 4,360. No issue with that. Depreciation is not allowed. The commissioning and abandonment. How much is that? 15. Abi?
19.
19. Yes. Repairs and maintenance. How much?
570.
The next one, royalty paid. How much? 40,990. NDDC. How much? 250. Under the Finance Act, finance cost is not allowed, right?
Yes.
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 Terminally. How much?
1,380.
Donation is not allowed. Concession. Rentals. How much? 20,470. Host community fund. You can see that once you know what you are doing, this thing will not take you time under examination. Examination condition, 1 million. Local governments. Levy. How much? 100. Environmental remediation fund. How much? 1420. Cost incurred in seeking information for oil deposit. Allow or not allow? Allow or not allow? Not allowed.
It is not allowed, sir.
Yeah, I love it. That is not allowed. Now, when you get to this point, you will need to go and compute your cost profit ratio. You go and compute your cost profit ratio. Okay. Now, how do you compute your cost profit ratio? You remember in my last class with you, we did that. We said we pause here, we now move to like notes. Now move to notes. In your notes, in your notes, I'll put it down. Cost profit ratio. So you say your gross revenue. How much your gross revenue in this question? 240-something thousand. 278,545. So maximum that we can take is maximum of 65% of the revenue. What is 65% of this revenue? What do you have? Who is talking? 65% of revenue.
181,054.25.
181,054. Okay.
0.25.
Leave that 0.25. Now, we will now compute computation of allowable expenses for CPR limits. So what do we do in that regard? Now, what is your total allowable expenses? Now, what is the total of this guy? This one.
One 184,690.
184,690.
90.
So let's go. One, 8, 4. $690. So you remember we said add capital allowance. Abi? How much is capital allowance in this question?
Capital allowance
1720.
is okay. So 1720.
172 like this, Abi.
Yeah, correct, sir.
Give me my value. Add the two together. What do you have?
One eighty 410. 410.
186
410.
410. Abi,
Correct,
less
sir.
the following. NDDC, you remember? Royalty, you remember? Concession renter, you remember? Environmental remediation fund, you remember? So you will less and host community development trust fund. So how much are NDDC in this question?
250.
Confirm?
Yes, sir.
Okay, 250. Royalty, how much?
40,990.
Concession renter, how much?
20,470.
20,047.
Environmental remediation fund,
1420.
1420. Host community development trust fund,
1,000. 1,000.
okay? So all this, you are deducting it from this. So what do you have? So what is the total of this?
64,130.
What do you call this? What do you call this one?
64,130.
So you now subtract it from that. So you have your allowable expenses for CPR limits. So what do you have?
122,280.
So you remember we said your allowable expenses shall not be more than 65% of your revenue. Abi? So it should be lower of 65% of your revenue. Abi? And allowable expenses for CPR limit, right? So our 65% of revenue gave us 182, 181,054. Our CPR limits gave us what? 122,280. So which one are we taking? Which one are we taking?
122,280.
122,280. But don't forget that our allowable expenses gone for this year was this guy. So by implication, we carry forward the balance, isn't it? So let's go back to our solution. In our solution, this is total allowable expenses. Abi, allowable expenses for CPR. You have 122 what?
280.
280. Right? So this minus this. Carry forward. So allowable expenses carry forward will be what? We close it there. What do you have? What do you have? What do you have?
62,410.
So this one is what I'm now going to take to compare with this value. So 1, 2, 2, 8. So what is my accessible profits?
156,297.
156,297 accessible profits. So we'll shift this. We'll take, don't forget this number. Let's go and continue somewhere else. So that means by implication, when you are going to be doing this one, this is your computation for CPR limits. You must go to maybe another page entirely. You give space because I did not give space, and that's why we have to go and continue on another page. So let's continue. So let's continue. So what is my continuation? I call this one continuation. What is my accessible profits? What do I have?
156,297.
We should have 156,297. Have we? So what else do we do? What are our loss relief?
655.
So loss brought forward, how much?
655.
655. Relief for the year, 655. Carry forward, nothing. Are we? So what do you have?
That is
155.
155,642. 155,642.
155 642. One 65642, right? So call this, you remember we said this should be our adjusted profits. So I'll change it. Adjusted profits. So our accessible profit is when you have deducted your, what's it called? Your loss. Okay? Under company income tax. Under, what's it called? Hydrocarbon tax. Okay? Do you have any question? Chineye, do you have any question for teacher?
No, sir.
Are you following me?
Yes, I am.
Good. Oluwanifemi, where have you been?
Hello, sir. I have a
Oluwanifemi.
question. No.
Wait, I'm talking to Oluwanifemi.
Yes,
Oluwanifemi,
sir.
where have you been?
I
Oluwanifemi,
Good morning, sir. Well done,
I
sir.
greet you. Where have you been? We have,
Sorry,
we
sir.
have not, we have not seen your face. So let me see your face.
Okay, sir.
Yes, ma'am. Tell you the time. Tony, continue with your question.
So I don't have any question.
Yes, sir.
I'm okay,
Yetunde,
sir.
Is there today? Yes, sir.
Yetunde.
Yes, sir. So I want to ask question based on the revenue.
Yes, ma'am.
You know, in the question, they gave us revenue. The revenue they gave us in the question, is it actual?
Is actual, yes.
So we need to compute, we need to now compare the actual with the fiscal price and take the
Yes,
higher rate.
yes, yes,
Okay, thank you, sir.
yes.
Yes, I just want to be sure.
Okay.
Bless
Sir,
you.
hello, sir. Sir.
Yes, Michael.
Yeah, please, sir. I just want to ask a question, please. Please, I have this thing. Please, can you help us with the definition of adjusted profit, accessible profit, chargeable income, and chargeable tax? Is it possible, sir?
We've done that in the last two classes. Go and watch the video. I have
Okay.
taught
Okay, sir. All right. Thank you, sir.
you. Okay, Oluwanifemi, go back to you. Talk, we will see you.
Another question.
Wait, I want to see Oluwanifemi.
Another question, sir.
I want to see Nifemi.
Yes,
Okay.
sir. Can you see me now?
I can't see you. Okay, wait. Where you are, that thing is
Yes,
distract.
sir.
That song.
Let her
That
close the curtain. Let
close
her close
the
the curtain.
Okay, cotton.
Okay, we manage. Close the second curtain too.
Oh, okay, I'm coming.
Okay. While we wait for her. Raise your head up.
Yes, sir, I'm coming now. I don't understand this thing. Can you see me now?
Yes, we can see you. Good.
Okay.
So
Good
if we
morning,
see you
everyone.
outside now, we know you. Okay, good. Thank you. Let's go ahead.
Yes,
Thank
sir.
you, Oluwadifemi. God bless.
Yes.
So let's move ahead. The next one that we need to now do is our chargeable profit. To do our chargeable profit, we less capital allowance and also less production allowance. Oh yeah, what's my capital allowance? What's my capital allowance?
1,720.
1,720.
Don't survive.
1,720.
Your production allowance, how much?
3,300. 3.3 million.
Any other information? None. So we will now have our chargeable profits. What's our chargeable profits?
150,622.
Now, on that, we will now calculate our hydrocarbon tax at 15% of CP. So what do we have?
Two 22,593. 22,593.
So that is that. Okay, I haven't done that. We'll now go to company income tax. We will go to company income tax. I'll do a very, very simple and straightforward stuff. I don't want to bother you. See what I will do. Companies income tax. Take the adjusted profits from the hydrocarbon. What's the adjusted no. Oh, what will I do? Okay, take the total revenue. What's the total revenue? I just want to do a shortcut. I don't want to waste your time. Your total revenue is what?
276,577.
Is this one? Oh, 272, 270 something. 77. 277. Solomon. Is it the only one in class?
278,577.
278,577.
Because I did not see 277 years, sir. So I'm
No,
lost.
I'm just saying that you called the number for me. I don't have the number.
278,577.
Abi, that's the total.
Yes.
Okay. So take out the balancing charge from this, so that we'll do the one without the balancing charge. What is the one without the balancing charge? That is 545. Abi?
Sorry, I don't understand.
When I was teaching you company income tax, did I usually put balancing charge as part of your balancing
No,
charge is after your accessible profits. That's why. So allowable expenses as per hydrocarbon. What is the total allowable expense as per hydrocarbon? This is total expenses. Who told you? One told you.
Yeah, 184,690.
This value 184.
690.
You don't need to go and bring them in again. 184,690. 184. Now, there are some expenses that we did not allow before. Abi?
Yes, sir.
Abi?
Yes, sir.
Yes,
Finance
sir.
cost.
Yes, sir.
Yes.
Finance
So
cost,
let's
sir.
go. Finance cost. How much is finance cost?
520. Sorry, 510.
510.
510. Shola Bukiel. 510, right? The next one. The next one. We have donation to, yes.
Recognized charity home.
How much?
130.
130.
130.
The next one.
Secure seeking information for all.
That one is not allowed now. We have said it's not allowed. If it's not allowed now, hydrocarbon is not allowed yet.
It's not allowed. It is not allowed anywhere, sir.
It's not allowed anywhere. Purchase of information is not allowed anywhere. So we already discussed that.
Seriously?
Yes. So, if that is the case,
Sir, please,
what
I
else?
don't hear what you just said.
I said purchase of information is not allowed. Okay. So that is
Thank you,
why
sir.
all right. So that is all that is not allowed. So we add this together and subtract it from our this thing. What do we have? So we have our adjusted / accessible profit. What do you have?
185, 330.
330.
So subtract it. What do you have?
That is 93,215.
To bring in our balancing charge. How much is our balancing charge?
32.
52. How much?
32.
Confirm?
32.
32?
Yes, sir. 32.
Correct, sir.
32, sir.
32.
Okay. So the next one is for us to remove loss. Okay. Now, the question you now be asking me is that, is it the same loss that we have removed under hydrocarbon we are removing here? Yes, it's the same loss. How much is the loss? 665. For the year. Carry forward. Mr. Asa, I'm in the class now. The same capital allowance we will bring in. Capital allowance for the year is how much? 17. Relief for the year 1720. Carry forward nothing. For a classroom. So you will not bring production allowance here. Production allowance is not according to company income tax. So total profits. What was my total profit? What was my total profit?
Calculation is 93214.
90,862.
Company income tax at 30%. Tertiary education tax at 3%. Give me my value. That is the end of the question.
No, sir, it's 9872.
9872.
Yes.
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 Is 10 naira difference now?
Okay, now. Sit down there. So what do we have?
CIT is 27261.
2 us.
272, 27,262.
Okay, that is 27,261.6. That is 27,262.
Okay. Tertiary education tax. 3% of your assessable profits. What do you have?
2,796.
So that is the end of the question. Do you have any question for me?
Sir, you said tertiary education tax, 30% of accessible profit. Is it 30% of total profit?
It's not total profit, though.
Accessible profit is 30% of accessible profit is 4,669,000.
Where do you see that one? Where do you see that one? Your accessible profit for company income tax is 93,215. Isn't it? This one. So 3%
Yes.
of this is what we are talking about.
So I have a question.
Okay, go ahead with your question.
That please, I don't know why we are not adding our depreciation to get our adjusted profit under CIT.
Okay, so what we have adopted here is a revenue approach. Do you understand me?
Yes, I'm listening to you.
Is revenue approach. When you are using revenue approach, you will not consider anything non-allowable. Do you understand me?
Yes, sir.
So depreciation is not allowable. What we are considering here is allowable expenses. So that is why I did not consider depreciation at all.
Thank you.
Okay. Any other question?
So please, I have a question.
Yeah, go ahead.
Okay, so my question comes with after this computation of CPR, and we took the lower of the maximum 65% and the allowable after we've done that. Now that carry forward of that we will carry forward, how do we, is it that next year it will now be
go ahead.
Okay.
Yeah,
Is it that next year now? How are we going to account for it?
So next year, let us assume, thank you for asking this question. Let us assume that, you have done this year, right? So next year, you now want to do for next year. So you will bring the balance, this balance, this one, this 62,410. You will bring it and add it to this total allowable expenses. Do you understand? You will come and add it to this one, to this guy. Do you understand what I'm saying? Before you now compute again for this year. Do you understand what I'm saying?
I do, but so that means they'll keep carrying something forward every time.
No, it's not. So at times they might take for example that the restriction, this 65%. Let's say this guy is 100K. Do you know that would have allowed everything here? There will not be restriction, because by that time this guy would have even been more than this. So you will not carry forward anything at that instance. So that's what we are saying. You will not carry anything forward. If your expenses is more than the 65%. Do you understand? So that's what we are saying.
Okay, sir.
Any question? Okay, just like I said the other time, let's give ourselves a passing word. Just like I said the other time, if you need to, when you are reading and you encounter any challenge, myself and Mr. Idris will be available till you write your exam. We'll be available for you to attend to any of your needs, any of your requests. We will be available to attend to it. So if you have any issue, do not hesitate to reach out to us. We'll be willing and ready to attend to you. That is number one. Number two is, just like I've told you, your pilot questions are very essential for this diet. Pilot questions are questions that the examiner sets to mimic what they are going to be testing, the way they will be testing the exam. Okay, so that is what we call pilot question. So examiner expect that you study it, and questions will be coming out from this diet. So look at the pilot question and ensure you study it. So the more questions that we're going to be sending to you guys We are going to ensure that we put the pilot question in the mock question so that you can see how the exam will look like. Designs. So if you have any question at any point in time, you are free to ask us because we'll be ready and willing to attend to any of your questions. Okay? So in the absence of no question today's class, I want to bid you farewell. And
Sir, please don't do us farewell. Sir, please, I had earlier requested for a marathon revision. Please,
which
sir.
marathon? There is no marathon edition. So what if you want that? I don't think I have that time to do that. But what we can actually do is we can have a class scheduled for maybe next weekend, 1 or 2 hours, and any question that you have that is bothering you, ask me in that class, and I will answer you. What do you think?
Okay, sir.
Or as you are reading, if you have any question, ask me. I'll be willing to answer you. And Mr. Idris taught you guys pioneer legislation.
Yes, he has.
Yes, sir.
Okay. Do you understand it?
Yes, sir.
Yes, sir.
Okay. It's coming out in the exam, most likely. So
I've not gone through it now. I can't say I understand.
Go through everything that we have taught you so that when you are coming to next class with me, if you are asking me a question, I will know that you have read or not. Okay, so go through it, and if you have any question, bring it up in the next class. So that will be end for today's class.
Hello, sir. Please, sir, I have a question.
Yeah.
So I was going through May 2025 hydrocarbon tax. I discovered that their revenue, the one in the question, is exactly how they computed it in the solution. They didn't do 5.2 million barrel times $30 times.
So that means the revenue is the same as actual.
Yes.
If it is the same thing, you pick it now. Except it is not the same, you take the higher of the two.
Okay. All right, sir. Thank you, sir.
All right. Okay.
But the pilot question you were talking about, is it that you sent or you send it?
I didn't hear that.
The pilot question you were talking about, is it that you've sent it or you will soon send it?
No, I'm not going to send you. Pilot question, they are on the ICAN website.
Oh, okay.
Go and look at where you have study pack. You will see the pilot question. So look at the question pack where you have the study pack, pathfinders. You will see the pilot questions there. Do you understand?
Are we still
Yes.
meeting next week? We are meeting next week, sir.
I will try. Remind me during the week. Okay?
Okay, sir. Okay.
So it's just for us to talk about everything that we have discussed from the beginning to the end. And if you have any question from Mr. Idris' part, you can bring it up in that class.
Thank you.
All right. See you guys. Start reading. You know your exam is in 3 weeks' time or 4 weeks' time. Start reading. And for those of you that you like waiting till 9 minutes to read, that is not how to do this exam. You have to continue reading. Maybe from November, start reading rigorously. If you have been doing 2 hours before, extend to 4 hours. And for you to go and write this exam, you need like at least 1 week before the exam. 1 week, take break 1 week before the exam, before you go for this exam. 1 week before exam. So that you can read very well for the exam. Okay? All right. See you next.
Thank you, Mr. Kugova. Love you. Thank you. Bye.
Bye. Love you guys.
Thank you, sir.